Can you hear me better? Yeah, okay. Excellent. So this afternoon's roundtable is on building a modern and robust banking system, Poland's experience after 1989. And first, I'd like very much to thank the Studium Europy Wschodniej for organizing the conference and particularly for inviting us and our distinguished panelists, whom I will introduce in a minute. And specifically, I'd like to thank Director Jan Malicki and Director John Mickel for organizing this panel. I had the pleasure of many years ago, John, don't want to embarrass John by saying how many years ago, being a fellow student with him at Columbia University. So it's great to be back here at the University of Warsaw together with him. One of the sub-themes of our conference is transforming infrastructure and society. And one of the points that we want to discuss today, one of the questions that we will be asking in our panel is why is building a modern and robust banking system and financial institutions important in establishing independence from a socialist economy and a communist political system. So we will have a historical perspective, and then we also hope to ask some questions today and answer them. Where are we today in that process of transformation, or more specifically, we've now reached, we think, concluded that process of transformation, but where do we go from here? Where does the Polish banking system go from here? What else needs to be done in order to maintain a modern and robust banking system? On pages 18, 19, and 20 of the program, you will find short biographies of our panelists. And then on pages 21 and 22, you will find a chronology of events that are important here for the historical aspects of what we'll discuss. We put the chronology of events in so that you wouldn't, hopefully you would be able to keep track of it. We wouldn't have to go through all of the dates, but we wanted to highlight some of those events. With that, I'd like to introduce our panelists, starting with Stefan KAWALEC, who will give an introduction. Stefan, now you can still wait a second. I'll introduce everybody. Stefan is the president of Capital Strategy, an independent advisory firm here in Warsaw. When Professor Leszek Balcerowicz became the Deputy Prime Minister and Minister of Finance in 1989, Mr. KAWALEC became the Director General of the Ministry and Chief Advisor to the Deputy Prime Minister. He's held many important posts since then, but Leszek Balcerowicz himself has said that obviously there is the Balcerowicz plan that we will discuss, but with respect to the restructuring of the banking system and financial institutions, he refers to the KAWALEC plan. So you will hear about this from the main author himself. And Stefan had an excellent team who worked with him. One of the members of that team was our panelist, Dr. Krzysztof Kalicki. Dr. Kalicki is currently the president of Deutsche Bank Polska and country manager of Deutsche Bank Group in Poland. When he's not engaging in those functions, he still manages to be a professor at Leon Koźmiński Academy and author of many publications. Sławomir SIKORA, przepraszam, is the CEO of Bank Handlowy in Warsaw and City Country Officer for Poland, having been appointed in 2003. Actually, both Sławek and Krzysztof together are currently the two longest-serving bank presidents in Poland. So they must be doing something right. And finally, our other panelist is Dr. Hubert JANISZEWSKI, and Dr. JANISZEWSKI is currently the Deputy President of the Supervisory Board of Deutsche Bank Polska, as well as the president of several other supervisory boards in Poland. And relevant for us, he was the managing director of Bankers Trust and also the head of HSBC Investment Banking in Warsaw, and was responsible in those functions to work on the privatizations of much of the Polish banking system that we will be discussing today. So with that, Stefan KAWALEC will give us an introduction, and then we will move to the panel. Thank you.
Can someone help me with my presentation to put it? Because I prepared a few slides to better organize my introduction.
Oh yes.
Nie, to nie to. Ladies and gentlemen, Poland was the first country that undertook to transform a socialist economy into a market economy. The government of Tadeusz Mazowiecki was established on September 12, 1989, and the government announced that it would transform the economy from socialism to market economy based on private ownership with freely exchangeable currency. This actually meant the transformation from a system in which real banks were unable to function into a system that could not function without effective banks. Because in socialist economy, there was no money in true sense of such word. Money served only a certain limited purpose related to the distribution of consumer goods, but still a significant portion of consumer goods were distributed through the use of ration card, special coupons, or through informal channels such as sales made under the counter. And enterprises had their inputs and outputs rationed. The simple fact that an enterprise had money, zlotys, on its accounts did not give the enterprise the right to buy needed goods, if the rights to obtain such goods were not included in the appropriate distribution list. Having zloty also was insufficient to purchase goods from abroad. For that, one needed foreign currency, which was also rationed. Because there was no real money, there was also no place for banks in the real meaning of this term. In this, the financial sector differed from other sectors of the economy. Production enterprises, for instance, cement production, automobile manufacturing, or shoes factories, function in a socialist economy as to their production processes in a manner similar to that of the West. The engineers in charge of manufacturing were often highly qualified and without the difficulty could find common language with their peers in capitalist countries. The banking sector was different. Also, there existed institutions that were called banks. They did not fulfill the role played by banks in a market economy. there was no credit risk because regardless of what the state enterprises produced, it always found purchasers. Prices were always set at levels that cover costs. Thus, the fundamental banking skill, that is the assessment of credit risk, could not be developed. And when Mazowiecki government when Mazowiecki government was created, the economy was in a very deep crisis. First, there was enormous foreign debt that was not being served for many years. Second, the inflation was running at the annual rate of 7,000%. Because this inflation skyrocketed in August 1989 when the outgoing communist government freed food prices, and at that moment budget deficit that was financed since the beginning of the year by just printing money resulted in huge price increases. And over 3 months, from August to October 1989, prices increases by 190%. And should this rate continued, for 12 months, the annual rate would be 7,000%. The economic team of the government, led by Leszek Balcerowicz, analyzed the situation of the countries that contain hyperinflation. And we realize that there is no single example of a country that was able to contain hyperinflation gradually. That meant that a decisive action will be necessary. And also there was a conclusion that the sooner this action is taken, the better, because otherwise hyperinflation will have a devastating impact on the economy and on the society. That's why the government prepared its stabilization program very quickly, with less than 4 months since its establishment. And in December 1989, Parliament enacted a package of several laws that took effect on January 1, 1990. These laws fundamentally changed Poland's economic system. The program, which was called the Balcerowicz program, included fundamental liberalizing actions. Convertibility of the zloty was introduced, foreign trade was freed, prices were liberalized, and those distribution lists for products were eliminated. At the same time, measures were introduced to achieve macroeconomic stabilization, above all to get the budget deficit under control so that inflation would not longer be spared by such deficit. As a consequence, in January 1990, the Polish zloty became both in the hands of consumers and of enterprises a currency in the real meaning of such a term. Hundreds of thousands of people set up their own businesses. Foreign investors began to be interested in Poland, but one could name 3 infrastructural barriers that made the growth of commercial activities difficult. First, the lack of good road infrastructure. Second, the inadequate and poorly functioning telephone system. And third, the lack of efficient bank. When a person wanted to establish a firm, it took a long time to find a bank that would agree to open a bank account. Then when the account was opened, a bank transfer from one company to another lasted many, many days. So people often had to transport cash themselves in briefcases or even suitcases. Therefore, the creation of efficient banks became one of the key challenges facing the country in order to enable the functioning of market economy. The creation of an efficient banking system was, however, a long-term process. It was achieved through the several concurrent actions. First, the creation of a two-level structure for the banking system with a central bank and commercial banks. In Poland, this change was still carried out by the last communist government. In 1988, the government carved out of the National Bank of Poland the bank branches that engage in the financing of enterprises, and 9 new commercial banks were established from these branches. In this way, the National Bank of Poland, which had been a monobank during the socialist era, was limited to the role of central bank. Other concurrent actions were actually allowing the creation of a new bank, encouragement of foreign banks to come to Poland and open their operations, creation of banking supervision, and also reorganization, restructuring, and then gradual privatization of state-owned banks. Similar actions to create a banking system were undertaken later in other former socialist countries. One of the effect of these actions was the growth of the number of banks. In Poland, the number of commercial banks rose from 5 in 1988 to 104 in 1993. In Russia, there was initially 10 commercial banks, but after liberalization, this number increased to 2,500. And there are actually two issues that can be deemed as specific features of Polish transformation, distinguishing the situation in Poland from the situation in the majority of other post-socialist countries. The first is the question of foreign debt, and the second is the manner in which the bad debt crisis was resolved. And at that time, Poland had a foreign debt of approximately $40 billion. Today, such an amount might not sound impressive, given that Poland's export of goods and services total $250 billion. But in 1989, total Polish exports in convertible currencies amounted to $6 billion, which meant that foreign debt was 6 to 7 times greater than Poland's annual export. On the basis of unilateral decision, Poland had stopped payment of principal and interest on such debt and was in default to its creditors, which included leading US and European banks. These banks proposed that they would gladly open a bank if the Polish state permitted the conversion of Polish debt into equity in such banks. In effect, this meant that the Polish government would need to pay this capital of newly created banks in return for forgiveness of the debt. However, from the beginning, our plan with respect to the foreign debt was different. We wanted to seek its steep reduction. Despite many offers and pressure, we refused to accept any conversion of debt to equity in the financial sector nor in other sectors. Foreign banks very much wanted to invest in Poland because they saw that Poland was a potentially interesting banking market where with the investment of a relatively small amount of capital and know-how, a large and attractive market share could be achieved. But on the other hand, this bank had their principle that stood in their way. In some financial institutions, there were hot internal discussion. Could one invest new capital in Poland, notwithstanding the unresolved problem of outstanding debt? In the case of Citibank, which was one of the first major foreign banks that came to Poland, these discussions took more than a year before a decision was taken. And in 1991, Citibank Poland was created. Looking back, the date of 1991 now appeared to be quite an early date, but from our perspective at that time, it was agonizingly long period for the decision to be taken. Other banks took even more time to decide. Another distinguishing feature is, as I said, the way to approach the problem of bad debts. Actually, in the majority of countries that move away from the socialist system in 1990s, within 2 or 3 years after the transformation, the problem of bad debt arose in the banks. The reasons were many. One material cause was the lack of experience in functioning in a market system where credit risk exists that needs to be analyzed and estimated. Further, the analysis of credit risk under the market condition as they then existed was extremely difficult as turbulent changes were affecting price, cost, profitability, and other parameters. Added to all this was the falling GDP during the initial period of the transformation. When a nation's economy is contracting, it is natural that a material part of the credit portfolio of banks cannot be repaid. In particular countries of Central and Eastern Europe in 1991 and 1992, non-performing loans totaled to 25 to 50% of the credit portfolio of banks, according to studies that have been made. International financial institutions, such as the World Bank, recommended that the state should increase the capital of banks, while at the same time transferring their bad debts to a specially created restructuring agency. This solution was implemented in many countries in Central and Eastern Europe, among them in the Czech Republic, Slovakia, Hungary, Slovenia. In Poland, we did not wish to implement this solution for 2 reasons. First, we feared that if we remove bad debts from the banks and give them new money, they would proceed to grant new bad loans. Second, we feared that if we were to create a single agency to which the bad debts would be transferred, that agency would be unable to act with sufficient energy and efficiency to restructure these debts. We feared that such agency would tend to drag out the restructuring of debts in order to maintain its own existence. Thus, there arose the concept which became embodied in the law of the financial restructuring of enterprises and banks passed in 1993. In the very title of the law, we emphasize that it was intended not just to solve the problem that banks faced, but also to create a mechanism facilitating the restructuring of enterprises. We feared that if you would go to Parliament with a proposal to provide banks with additional capital, it would not be viewed favorably. The view of politicians was that banks were supposed to provide money, not to receive it. Therefore, we prepared and presented the program to emphasize that its consequences would be not only an improvement in the balance sheet of banks, but that enterprises would also benefit from it. The law required banks that received new capital to restructure defaulted credit within a year, utilizing closed list of methods specified in the law. One such method was to sign a settlement agreement between the debtor and creditors. The settlement agreement could provide for a write-off of a portion of the debt of the enterprise, or the lengthening of the repayment period for such debt, as well as the conversion of a portion of the debt into equity of in the enterprise. The law turned out to be an effective and efficient solution. As a result of the law, the bad debt portion of credit portfolio of banks were restructured within 1 year. Around 300 settlement agreements were signed, and thanks to them, a large group of sizable enterprises obtained the chance to continue operating. These were enterprises that would have had to declare bankruptcy unless the settlement agreement were executed. A program also fundamentally changed the culture of the banks that had to solve the bad debt problems for the loans that they themselves had made. Credit decision of banks became more cautious and selective. Quantitative research of a large group of enterprises carried out by economists associated with the World Bank shows that during 1990 and 91 in Poland there was no positive correlation between profitability of enterprises and new loans made by banks to those enterprises. However, from the year 1990, when the Ministry of Finance required banks to separate and restructure their bad debt portfolio, a positive correlation is evident. Banks started to grant new loans to enterprises that were profitable. Thus, the banking sector began to act for the benefit of the economy, directing credit where it could be effectively used. This change in Poland's banking culture contributed to the fact that in the 25 years following the event I have described, until today, the banking crisis has not been repeated in Poland, and there has not been a need to allocate budgetary funds to bank rescues. In contrast, in each of the countries in Central and Eastern Europe that were previously named, where the banks received new capital and were painlessly relieved from their non-performing loans, bad debts reappeared and successive rescue operations from public funds were required. I believe that this suffices as an introduction to our discussion. Thank you.
This works? Ah, excellent. Thank you very much, Mr. KAWALEC. I would like to direct the first question to Mr. SIKORA for the reason that he was the next person to arrive in the Ministry of Finance in December of 1989. Mr. KAWALEC arrived there in September of 1989 along with the new government. And when you arrived there from Germany, it was right in December of 1989. Very soon thereafter, the Balcerowicz Plan was enacted by Parliament and implemented on the 1st of January of 1990. So my question to you is, what did you find when you got there to the Ministry of Finance? Were you putting out fires? Was there a long-term goal? What did you find?
Thank you, Peter, and thank you, Stefan, for this interesting intro. I'm sorry for everyone who had a conflicting thoughts about whether you should watch the Poland and Japan or come here and listen to the history, which is the ancient history for many of you. I joined the ministry when I was 27, and actually I wanted to do the academic career in Germany, writing about the German miracle. So in a sense, when I came to Poland in '89, it was like, oh, I was about to finish my PhD on German monetary reform of '48, and here you have the situation which is almost, you have a chance to participate in something which was very similar. So really, it doesn't happen often in life. So from that perspective, I was very happy. But looking at the audience, I have to highlight a couple of points which might sound strange to you. First, in '89, there was no internet, right? So I think that I know that in 2018 might be unusual. I'm not even talking about Facebook and others, but there was no internet. There were no mobile phones, and as Stefan highlighted, actually, you haven't had the phone at home. It was almost a privilege. When I came, and it was around the Christmas time, at the place, I got off the bus at the place which is today around Palm, where the only Palm in Warsaw, and took a walk on Nowy Świat to the Ministry of Finance, and I realized how big difference was Germany before Christmas and Warsaw before Christmas. The shop windows were completely different. The dirty snow on the street. So it was a bit of a depressing picture, but certainly entering the ministry and meeting some of my colleagues, I felt like I have a chance to be part of a very big and important project for my country. And what might be relevant also for you is that being in the previous system, before '89, you always dreamed about being in a situation when you can contribute to the country well-being. And because of the party system at that time, many young people decided to emigrate. That's not the case in Poland, and I think it's one of the achievements that young people in Poland do not have to emigrate to get the good education, to actually be able to learn the best and up-to-date knowledge from around the globe. There is a richness of various fellowship programs. So that certainly was a big difference. And when I look at the challenges, and I look at today, then certainly, I would like to kick off the discussion, my part of discussing at this panel by saying that building a modern and robust banking system in Poland after '89 has been a successful project. And maybe, you know, jumping fast forward since '89, because I know some of my colleagues will refer to this early times. I tell you that last October I participated in the biggest, world biggest fintech festival in Singapore, presenting the fintech environment in Central and Eastern Europe. And if I recall, '89 and 30 years later, this conference where we had many people from mainly Asia, but from around the globe, and talking proudly to about 2,000 people about how advanced is the Polish banking sector, was a source of pride for me. And talking that the banks in Poland are actually fintechs in many respects was a really taking people a bit by surprise that that's the case. Because when you compare on the international arena, you see how much we've managed to achieve starting '89 until today. So that will be my kickoff, and happy to answer all the other questions, but I don't want to take too much time of other participants. So thank you, Peter.
Dr. Kalicki, you were actually across the street at the National Bank of Poland and BP in 1989, and then you crossed over the street in 1990 to the Ministry of Finance. What did you find the Ministry of Finance? How did it differ between the two? Why did you cross over, and what was your experience back then?
Thank you very much. Thank you very much for the invitation. Good afternoon, ladies and gentlemen. Yes, it's true. So I was at the Warsaw School of Economy, and I was also advisor to the Central Bank, and I started there. That was '87. At that time, there was an Institute for Monetary Policy, and that was my topic. I was invited to join the institute. And that time, because nothing only started in '89, something started '87 and '88, even old system was inefficient, that was obvious, but some people at that time wanted to change the shape of the economy by using money as a mean of management and as a mean of managing economy. And that was a decision first to spin off from the central bank PKO BP, that was '87, and then Professor Baka, that perhaps is very well known here at the Warsaw University, decided to spin off also 9 commercial banks from the central bank as a base for further reforms of the so-called socialistic system. It was, I believe, fortunate development, because socialistic system disappeared very quickly, but the institutions as the base for further economic development and policy were in place. This is one issue that I wanted to emphasize. The second issue is following. I was on the other side of the Świętokrzyska Street in the central bank, and of course we evaluated what was the intention of Professor Balcerowicz policy at that time. And of course there's some, because I'm not so apologetic as my colleagues on Professor Balcerowicz, although it is a colleague of mine, I would like to mention that I have seen 2 big mistakes in macroeconomic policy that resulted negatively on the further development or made the transformation or transition period much more difficult. First issue that I believe as macroeconomists I need to emphasize at the very beginning was the decision not to increase interest rates as inflation have been growing. What has happened? You know, immediately money broad aggregate of money that was divided into, let's say, cash and sight deposits and savings deposit, converted into sight deposits and cash because the opportunity cost was too high. As interest rate was 5% and inflation was 10%, people noticed immediately that they have been losing their wealth. What has happened? You know, people accelerating spending money. So this policy allows real depreciation of money if you calculate something like 6 times. I remember a colleague of mine from the institute that she got some little money and she immediately left the central bank to the next shop to buy anything what is possible because money was losing on the value. Why I am saying this? Because in my opinion, this is my personal opinion, this mistake increased the instability in the monetary sphere and the people started to get rid as much money as possible and convert them to any goods. That's why what Mr. KAWALEC mentioned, inflation was 190%, and it is not a surprise because supply of goods were limited and demand was huge. That was one issue that I consider shake the economy and had later impact. The second point that I mentioned being by the central bank, that was the question of overshoot of depreciation of zloty, foreign exchange rate. You know, that was something that we were surprised in the central bank because one day Professor Baka came and said that Mr. Balcerowicz insists of having the new exchange rate 9.5 thousand zloty, and he is afraid that by this exchange rate, Polish economy will be flooded with the goods that will come from abroad because there will be huge demand. I told Professor Baka immediately that I am surprised because nobody reflected that so-called black market exchange rate, that was at the time perhaps 6,500 zloty, had nothing to do with the exchange rate that the goods were settled in the foreign trade, that was 350 zloty. So this expected and assumed slight overshoot of the exchange rate to stabilize economy was 3 times higher than it was really necessary because, as I discussed with Jeffrey Sachs, why he did it, he told me, oh, because we consider that black market exchange rate is the let's say, rate for equilibrate the economy. Of course, it was not. Why I am mentioning that, and why I always, this 25 years, criticized this, was following. Corporates and private people, by this depreciation, had no chance to import goods because these goods were too expensive and the market needed to go with inflation another few 100% to equilibrate the price, what was exchange rate, with the price on the market. Why I am saying this, because if you study macro, you know that interest rate is price for domestic money, foreign exchange rate is price for foreign money. If they are affected or goes different direction, then you have a big economic problem. Why? Because companies were unable to import goods. this necessary import to produce goods and to sell these goods to the market, because this market had not purchasing power to buy this at this time, a period of time. So we needed almost 2 years of very high inflation to equilibrate the effect of foreign exchange and domestic prices. And that has, in my opinion, perhaps many people could not share, but in my opinion, that was the reason for very big slowdown of the economy, because the economy dropped 33% in industrial production and 22% by GDP. Criticizing Mr. Balcerowicz, it didn't prevent that I supported him in the Ministry of Finance. I changed for the Minister of Finance, and I used to work in financial analysis, and later I was responsible for the supervising banking sector, let's say financial sector, including insurance sector. And then I would like to say that we also, although we are close colleagues, we differentiate, at least I differentiate two periods of time. First period, that was till 94, that was a period of big, I don't want to call this chaos, but it was something that everything fall from the hands, but the market has worked and adjusted by, releasing prices from control. The market slowly started to equilibrate the economy. And that time we had another challenger that joined this policy, that was Professor Kołotko, who prepared this strategy for Poland. And if you ask me what was the difference between one period and another period, I am ready to show, although I need to admit that nothing happens from the very beginning. So I used to work for financial sector by Balcerowicz, and I mainly continue to do for Professor Kołotko. There were some slight differences in the approach, but generally I could say the direction was kept. And this is the reason, I believe, that we were so pretty successful in developing Polish banking sector. But you need to know, sorry, may I have 2 minutes more? Because you cannot imagine what was the situation. The situation was following. Whole banking sector in Poland had the time, 93, $1 billion equity. If you compare today, we have, what, 70, $80 billion equity within 25 years. Whole credit was $4 billion for the whole economy. Today, you have $400 billion. So this is incredible progress that was made all through this 25 years. But also there were challenges because, as I pick up some numbers, 18 out of 81 commercial banks had no sufficient solvency ratio, 8%. 27 banks were on a recovery program, and 177 cooperative banks were bankrupt out of 1,500, and 659 were on recovery programs. So, you know, we were flooded in the Ministry of Finance with the claims of the people asking to return them their deposits and asking state to return them deposits because of all this bankruptcy. And I don't want to not to notice that Poland put that time, I believe you have mentioned the number, something around $90 billion to recover banking sector. In fact, I share opinion, recovery of banking sector was not only recovery for banks, that was recovery for the bankrupted in this period of depression, many corporates, because as depression stopped and in 94 came growth of 5, 6, 7% even, then most of this bad portfolio started to, let's say, improve, and that has additional impact on strengthening the banking sector. So, you know, there was huge adventure, I need to say, to work that time in the central bank and Ministry of Finance. Even I have some critical thesis that perhaps apologetic people don't share, but as scientist I can say only amicus Plato, but the truth is for me more important, at least what I consider true. Thank you.
Thank you very much, Dr. KALICKI. I will ask Dr. JANISZEWSKI also to share his view of that time period, and then perhaps given the first two comments, and particularly the macroeconomic comments, and we have 4 distinguished economists, we can return to some of the issues that Dr. KALICKI has raised here.
Thank you. Good afternoon. Now, I have a different perspective than all the previous speakers, for the reason that I was the one to execute their plans in terms of privatizing the sector. Now, to give you an idea of the situation back in 93, 94, it should be mentioned, which already a little bit has been covered by Mr. KAWALEC and Mr. KALICKI, describing you in general terms how the economy looked like and how the banking sector looked like. Now, the government was facing a task, among others, to privatize and shape up the banking sector based primarily on the spin-off of the 9 commercial banks out from the National Bank of Poland. The spin-off took place at the late 1988, as far as I remember, and the task of the government was to assist those banks to become a real bank. And a number of programs has been introduced. As you remember, there was a special legislation which provided funding for those banks by way of restructuring bonds. Then there was extensive training program of the management of the banks, because we didn't have sufficient staff to understand the modern commercial banking. Number of people went to the foreign institutions, learning the techniques of running the bank. There was a know-how fund from UK which provided funding for a number of advisory and training activities in all the banking sector. And there was something which was also invented at the Ministry of Finance, the twinning arrangement. Namely, all those 9 banks, as far as I remember, have received a twinning partner, one of the major Western banks. And the idea was that those banks would assist the management of the Polish banks to become a much more modern and efficient institution. The twinning program lasted, I think, about 2 years. And among the banks which were involved was, as far as I recall, was AIB, Midland Bank, ING, I don't remember any others, but it's not important. So the privatization program could have started only when restructuring of those banks took place, when the management was up to the task expected, and that took place in 1993 with the first privatization of one of the 9, which was the WBK, Wielkopolski Bank Kredytowy, which was considered the most advanced in terms of restructuring, management, etc., etc. Now, what you should be aware of is that both the ministry and their advisors were facing a formidable task. There was no domestic capital available. The knowledge of a market economy was rather limited. The stock exchange was at its infancy. The dilemma the government was facing was to sell the banks or to privatize the banks with the strategic investor, or should we spread the wealth through the stock exchange to general public? So these were the basic considerations before the government launched the privatization program back in '93. Now, once the first privatization of UBK was successful, thanks inter alia of the participation of EBRD, European Bank of Reconstruction and Development, who took a major chunk in this institution. The bank was privatized through stock exchange. That was the first successful privatization, and other banks followed. So this is as much from my perspective, may I say, and no doubt that it is a very successful program at the end. Thank you.
If I could just return actually to this question of the setting the correct exchange rate. So if there are any other comments that people want to have, but it's important also, you're too young to know, but when Dr. KALICKI mentioned that the exchange rate was set at 9,500 zlotys to a dollar, you might be shocked. 9,500, and now it's what, 3.5? This is what, something must be wrong here. Well, actually, what you don't know is, and this is in our chronology because it's also important, in January of 1995, the zloty was redenominated so that 10,000 zlotys on that date became 1 zloty. So you dropped off, what is it, four zeros off of the zlotys. So you were no longer counting in millions and even billions in terms of zlotys, but you got back to levels that we are at today. And that's why we refer to the zloty as a term of PLN, meaning the new Polish zloty, as opposed to PLZ, which was the old Polish zloty until the end of 1994. So with that little history lesson, I don't know if Stefan or Sławek, you care to comment some more on this? And I'll ask because from what I've read, the economists didn't know where to peg the rate. So in looking at it, you said Jeffrey Sachs was guessing.
Yes, because he considered that this overshoot from 6,500 in December '89, that should be above the exchange rate. The problem was that what I have mentioned, for the whole economy, you needed to wait. What is the part of the economy serviced by official exchange rate that was that time, and the part of the economy that was shadow economy that was serviced by different exchange rate. That was reality. The economy was split into, let's say, areas. The problem was if you wait that something like 80% of the foreign trade, so import and export, was calculated at 350, and you have 20% what is the assessment that was shadow economy with 6,500. So if you wait one with another one, then you come not to the 9,500, but you come to the perhaps 3,500. And this is the point. And of course, you cannot calculate as in mathematics or physics, but you know, the further development has shown that this overshoot was one of the biggest, in my opinion, macroeconomic mistakes, because if we discuss Balcerowicz plan and you get into the numbers, the assumption was that we will end up after this plan with huge deficit in foreign trade. But what happened? We ended up with the huge surplus in foreign trade, because by this exchange rate, everything you can sell abroad was very profitable for the exporters, and of course importers were squeezed because they couldn't sell the products by this exchange rate on domestic market. This is, let's say, the bone of my controversy with some other colleagues, because you know, the politics didn't allow the time to have a distance evaluation what has happened. We were all in hurry to deliver different solutions and reforms and so on. It was neglected, as in each economy that is liberalized and free prices. If you establish one price wrongly, then the other prices will go as long as they match the mistaken level and equilibrate the price parities. Yes, this is what we can draw, I hope, from the economic textbooks even today, so nothing has changed. The question of inflation, you would be surprised. I had another discussion with Jeffrey Sachs because I had such an opportunity. I asked him, why you haven't increased interest rates? Because today is obvious. You have inflation, you increase interest rate, you stabilize savings, you don't allow to go to the market to match liquid hot money. So his answer was, I don't know whether my colleagues confirm, but for me it was a huge surprise. I share with you today this. He told me, you know, because we believed that this money in the banking sector was communist money. Yeah. And I told him, you know, you would be surprised, because I believe they need not money because they got different coupons for goods, and very that what we researched by the end of 80s, most of this money belonged to the people. They were in so-called shadow economy or private economy, official, unofficial, and they accumulate a lot of monetary assets. I don't know whether it was his answer was really true or not true. At least I was surprised to hear something like such an interpretation. As economist, I was a little surprised, but it's difficult to judge, frankly speaking, because he was one of the advisors. I believe he didn't decide it on different issues, so perhaps only it was his opinion that he shared. But there was interesting why such things happen. So in this two, because I was always, how to say, obsessed with the explanation why these interest rates were never increased and why we had such a huge overshoot in foreign exchange rate, because I believe that from a macroeconomic point of view that had a significant impact on the first dip and later fast recovery. Even I told Professor Kołotka, because everybody interprets that this is his achievement. I told him, it is not only your achievement for stabilization of the economy, because if you recover the growth rates from very low base, they have been growing very fast. And this dip was quickly, how to say, made up. Because already there was in 93, we had an increase of the GDP by, I believe, 4%, later 5, 6, 7%. And we tried to, the economy was aiming to the potential growth. And difficult to say, but I believe the potential growth for Poland was the time between 5 and 6% it was possible.
Yeah, listening to Krzysztof Kalicki, and he was calling to be, to tell on the truth. And I'm just thinking about the truth when I talk about the foreign exchange market. We are the biggest foreign exchange bank in Poland on zloty dollar, zloty euro. And what I really learned from my experience is that you have to be very humble because the market will immediately challenge all your hypotheses. And basically people who are dealing with a spot market, they understand that forecasting the exchange rate is good for the researchers and macroeconomists, but probably not a good job for the people who are making money in FX. But I have two observations related to what Peter asked. First, 9.5. Of course, I remember the parts of the government at that time who said that 9.5 is too low and it will ruin the foreign trade. And there were suggestions going to above 12,000 at that time. So we have to be aware that it was no scientific discussion. That was rather very much a judgment call. And I admire people who've made this decision because that was one of the most difficult decisions to make. My second observation is related to being humble at the FX market. Is in Poland for 5 years, Swiss franc between 2004 and 2008 was actually Swiss franc was losing value against zloty. And I remember my family discussions where people around the table around the Christmas time were asking me, you're working in a bank, you're running a bank, you certainly know what the exchange rate will be in 6 months. And I told them I don't know. So they felt like I'm hiding the truth, right? They felt like I'm making money and not sharing it with the family. So I just warned them that earning in zloty and borrowing in Swiss franc, it could be dangerous because you have currency mismatch. So I was much better in terms of risk management than anticipating or forecasting what the actual rate will be. And 3 years, 4 years, it was almost, I was losing all my credibility. And then suddenly came 2008 when, as you know, within a couple of months, zloty devalued over 45% between September and December, and the same did for against Swiss franc. And then some members of my family were saying, oh, we knew that it cannot last forever. And that reminded me that the one, when you talk about the FX, you have sometimes the syndrome, which the Americans call it Monday morning quarterback, which I think is very much true, not only for American football, but also when we discuss the past.
Actually, before the Moderator government was created, majority of Polish economists didn't believe that introduction of convertibility of Polish zloty is possible. Most people thought that it could be very long period, and also I think that at the beginning, very few of Polish citizens believe that it can last, for long. And because of very high inflation I talked about, we decided to introduce convertibility of Polish zloty with a fixed rate for certain time, because we wanted a fixed rate between Polish zloty and US dollar to act as, anti-inflationary anchor, to increase confidence into new currency. And we had very thin international reserves. We got, special stabilization fund of $1 billion from foreign country. But I, have, my own writings for internal discussion. Then when I actually was showing that if we use exchange rate as anti-inflationary anchor, zloty will have to be undervalued, that we have to undershoot the value of zloty, because of uncertainty in the economy. It was, impossible to, struct, the right point very precisely, and it was clear that if zloty is overshooting, the stabilization will be ruined very fast, because we'll be losing international reserve, and stabilization may be undermined. That it was clear that zloty will have to be undervalued because of this uncertainty. As Sławek said, there was various calculations. There were calculations made in the Ministry for Foreign Trade. It was, the old ministry that acted in social economy, and there were experts who calculated what is the right rate for Polish export, and they came, Minister of Foreign Trade came to the government and said that if the rate is lower than 12,000, that will be, that would be actually Polish export will be destroyed. And ex post, we may say, knowing what happened, that zloty rate could be actually that zloty could be a bit stronger. That means dollar value could be lower, maybe not 9,500, but a bit low. But how much low, we don't know. We don't know precisely. And also what we can say is that probably we kept this rate stable too long. Actually, it was not the intention to keep it for 1.5 years, what actually happened. But in fact, it was kept until May 1991.
Okay, Stefan, I agree with you. At least there were some people, sorry, among others, me, that had different view, and I share your opinion. The majority of the people didn't know even how to calculate, how to estimate this. So this is my message. There are many young faces here, so study, also theory, because it helps to understand the real world. The second point is only that it was, zloty had so-called internal conversion. The real conversion was, according to IMF standards, was introduced in 1996, that we achieved the convertibility of the currency along the IMF criteria, so no restriction in so-called current accounts, current account transactions. As far as stabilization fund is concerned, no single penny was used because of what I have said. There was no need. But this money later was used for another purpose that we perhaps will discuss later on. This is Polish Bank Privatization Fund.
Well, actually, thank you. I think let's switch topics, and perhaps, in a sense, Dr. JANISZEWSKI, I want to switch to the importance of the Warsaw Stock Exchange and a little more in terms of privatization. How did you, what was the importance of privatizing by actually introducing the banks in terms of public offerings on the stock exchange, maybe not even just banks, but other privatizing enterprises? And how were you able to convince investors that you had credible information in terms of the offering memoranda and prospectuses that were produced at that time to convince investors to put up their money and invest in the stock market in Poland?
Now, part of the Balcerowicz plan was the necessity to develop a capital market. And there was a special team at the Ministry of Finance, as far as I recall, with Mr. Paga and Mr. Rozłucki, two key figures who were working on development of the capital market in Poland. And as far as I recall, it was in 1991 when the Warsaw Stock Exchange was reinstated, because there was a stock exchange in Warsaw before the war. So it was not establishment of a new body, but reinstatement of the Warsaw Stock Exchange. Now, for your information, you don't remember it, it was done in a symbolic place, and namely that the first seat of the Warsaw Stock Exchange, the new one, was at the building which belonged to the Central Committee of the Polish Communist Party. Now, at the beginning, the stock exchange was listing 4 companies, or 5, I don't recall exactly, all manufacturing companies. And the trading was lasting about 1 hour, 3 times a week. But over a period of time, with more listings, the stock exchange has grown, and a number of people found out that you can make money. Now, at the beginning, it was a fairly simple and easy, because there were a relatively limited supply and a growing demand, which created situation where whatever shares you bought, you were making money in a longer and a shorter period of time. There was developed a fairly sophisticated and modern environment, and all instruments were developed, like the Security Commission, like a depository, so that with the assistance of a French stock exchange, as far as I recall. So we had from the beginning a relatively modern, well-functioning, transparent stock exchange. Now that has led to a situation that not only Polish citizens were investors at the Warsaw Stock Exchange, but gradually the Warsaw Stock Exchange has been sort of recognized by the foreign investors. So when in '93, the Minister of Finance, at that time responsible for the privatization of the banking sector, was discussing the ways of privatization, they came to a conclusion, and in my view, rightly so, that instead of selling to a single investor a major chunk or a major share of the stock in privatized banks, perhaps it will be much better understood by the general public and accepted that the stock will be offered to the general public. There was a lot of PR and a lot of information available in the media to popularize the stock exchange, investing at stock exchange, to understand how the stock exchange works, etc., etc. The first three banks were privatized, therefore, by a mix, in a sense, by the mixed way, namely that large investors who may become a key investor in a bank were given only a limited possibility to acquire the stock. That was the case of WBK, as well as later BPH and Bank Gdański. And later the government was offering, in a secondary, offering additional stock. Now we had, when I was working at HSBC, I had an opportunity to introduce the first bank to the London Stock Exchange, and namely Bank Gdański was listed simultaneously at the Warsaw Stock Exchange and partially through GDR's Global Depository receipts at the London Stock Exchange. This way we have expanded the scope of the investors out directly on a foreign recognized market. That definitely has helped in the interest of the foreign investor community in Polish stocks and in Warsaw Stock Exchange. So that's how, that was in early 95 when the first Polish entity was listed at the foreign exchange.
And if I may add and link the capital market development with the banks, the 2 points I want to make is, first, most active brokerage houses which were intermediaries between institutions or individuals willing to buy were owned by the banks. So banks already halfway restructured and some of them privatized were actively engaged in supporting and developing the capital market by establishing professional brokerage houses, and that was one point. The second is that, you know, within the 90s, most of the bank got privatized. So what you had at the end of 90s, when you look at the public capital market, so stock exchange, you would see overweight with the shares of the banks as compared to any other industry. So I would say that the success of the restructuring and building the new modern banking sector was also had some positive effect on other parts of the financial market in Poland.
Mr. KAWALEC mentioned also as one of the important factors was the renegotiation of Poland's foreign debt. And here I'd like to ask both Dr. KALICKI and Mr. SIKORA, since you both were also involved in the ministry at that time in that process. Do you have anything to add as to how do you get the foreign governments and other commercial banks to reduce your sovereign debt by 50%? What's the key?
I believe Sławek was first because he negotiated so-called Paris Club. I was second because I was involved in negotiation of London Club. So private bank receivables, so our private bank debt.
Actually, I was not directly involved in the negotiation team. So what I can say is what I learned from my colleagues from Citi. Citi had exposure vis-à-vis Poland, which was not paid. So I know that there was a big debate in 1991 when Citi established its operational presence in Poland, whether to really you do what the bankers usually refuse to do, which is put good money after bad money. So you've lost the money with Poland, and Poland will invite you to bring new money, which usually the bankers refuse to do. But Citi, fortunately for Poland and for Citi, did put a couple of millions of dollars for the first operation, which for the first 5 years of its existence was one of the most profitable in terms of the capital return entities within Citi network. So starting with a bad reputation at Citi, Poland earned a very positive reputation a couple of years later. And second angle to that is that my colleagues at Citi at that time were pushing strongly the Polish government to implement the program which was called the debt to equity. So they proposed that instead of writing off 50%, which was the Polish government idea, they said, okay, let's convert the debt which we have vis-à-vis Poland into some form of a Polish assets. And the government was like debating that, but finally refused to do that, which I think with hindsight, you feel like it was a right decision.
So what I can add, Poland defaulted on bank's debt in 81. That was $20 billion liability, and the cumulative interest brought us to the 42 billion foreign debt at that time, total. So sovereign debt and banking debt. So I was, first, I was asked to implement this Paris Club because the agreement was done, but it needed implementation. I used to work together with Prime Minister Bielecki because there were also different money that was transferred to different funds, including some money from the stabilization fund. In case of bank's debt, I need to say there were very difficult negotiations, but of course our argument was that as on sovereign debt reduction was 50%, we cannot differentiate the creditors and we need to apply the same rate. It was not so obvious for the banks. From my experience, it was a very humiliating process because usually we go to London, we were sitting 5 hours in the lobby waiting for 5 minutes discussion. It was nightmare. I don't want to, let's say, have the same experience anytime in the future, or I don't wish anybody. The point was that it was very difficult because as you have governments, you have few governments. As you have banks, you have many banks and the other banks that represent other banks, and everything needs to be agreed and approved. So it took us, we achieved agreement in 1995. That was debt reduction in so-called discounted value. So we needed to calculate interest rates, yes, the yield curve, yes, for 30 years sometime, to discount the future flows to the particular day of transaction. And in this calculation, of course, interest rates were very important. And please remember, that time, the interest rates were very high, much higher than today. So discounting was much bigger That's why to achieve this 50% was easier than it would be today. But finally, there was, I remember, the president of this London club became Mr. Walter, the head of Dresdner Bank, and frankly speaking, that was a person young, let's say motivated, and he put together the banks, and finally we achieved this. We got, I need to say also, big support from United States, because that time White & Case was our advisors, and they were financed, I believe, by the US Treasury. So, but, you know, that was opening gate, you know, as Poland settled this problem, that was, and why it was easier to settle, because what I refer, this slowdown in the beginning of 1991 was a very good argument that we deserve, and we cannot develop further if we have no this reduction. But I need to say also that 1 year later, in 1996, we got first investment rating from international agency. One was, this investment rating was BBB minus, and one was BB plus. It was sub-investment rating, but it opened access to international markets, because we issued immediately Euro bonds, and these Euro bonds established the benchmark for further financing in Poland. So the banks, the corporates started to have access to the capital markets, foreign capital markets, and I believe it was pretty big success story, because that also opened access to OECD, what they expected. They allowed us to liberalize and to implement full exchange of zloty to foreign currency. So many things combined with this final outcome opened, let's say, Poland the door to many different issues, so to OECD, to European Union, finally to capital markets, and what was also very important, if you follow the numbers, since 1996, the inflow of foreign direct investment has accelerated, because that was a period of time that credibility of Poland returned to the country.
I'd like to save some time for questions from the audience, but before we do that, if we could move to the present day with our panel. If we look at the present day, using the example of Citigroup, which has approximately 8,000 employees in their global operations here in Warsaw. Actually something I don't think any of us could have foreseen when we were talking about this from the perspective of 1989, 1990. Deutsche Bank has a long history here. JP Morgan has opening an office with 2,500 employees here. These are back operations, they're global operations. We can see the same occurring with respect to the Polish banks trying to strengthen themselves with the support of Prime Minister Morawiecki. So what do you see in terms of the banking system today? Is everything really so, let's say, rosy and good for the banks? Or are there some things that you would also like to see changed and think could be improved? Should Poland become part of the banking union and the Eurozone? We could be here all day answering these questions, but perhaps we can try to highlight some of the important points here. I don't know who wants to start.
It's a quite challenging question, and when Peter asked me some time ago to talk about today, I was like wondering whether I should talk about bank as I see it from inside, whether I should talk about the bank as I see it through the client lenses, being the companies or individuals, because there is a lot of perspective you can take. But one thing which I'd like to state up front is that it's good if you compare Polish banking sector to any other sectors which are maybe less restructured. So when you embark, for example, on the PKP, the old-fashioned train, sometimes you feel like not much has changed. And this is a big difference. So today's banking sector for an individual client, the biggest difference, as I see, is in '89, you were a client on a given branch, which was like a bricks and mortars. You had to go there, and you had tons of papers to fill. Today, as a client, this is your bank, right? This is your bank. And this will be only more of these. In the last 5 years, we as City Handlowy in Poland, we scaled down from 153 branches around Poland to about 20, and the volumes of our business is bigger than it was with 150 branches. And the reason is because we observed that our clients don't want to go to the branch. You actually want to bank here. You want to switch from Twitter, Facebook to bank, and we are one of the applications which you have in your smartphone. The second difference is that in '89, '90, it took you ages, I mean, days, weeks, to transfer your money from one place in the country to another place in the country. Today, Polish banking sector, and actually since 2012, delivers that online. So you can use the instant payment so that you can transfer money around Poland, and you can even, if you are a good client of the bank, ask for the same day transfer overseas. So I think when you compare, when you are a client in Poland and you are a client somewhere in Western Europe, which was always like a dream, go-to model, or United States, then you realize that banking sector in Poland made a huge progress, and even there are some areas where we are much more advanced than the banking industry in Western Europe or US. You would be probably surprised that we introduced the instant payment, so online payments, in 2012, and US did it in November last year. So more than 5 years later, right? So, and there are other things in terms of the quality of service, but I think getting rid of bricks and mortars, going to digital, leveraging the technology, and getting rid of paper for individual clients, there are the most visible signs of the progress. While, of course, if you go inside and you look through the lenses of a manager in the bank, you see much more. And I have probably two favorite points from that perspective. The one is that I'm amazed how many people I can send, Polish talent, to the global network of Citi. Like 15 years ago, probably you had the glass ceiling at the level of about vice president, which is a corporate title. Today, you have people with the directors, managing director being the biggest, the highest corporate title in our corporation globally. And I have the people, Poles, growing their career within Citi in Poland and taking the MD positions in the global network. And if I recall what was the talent in '89, '90 in banking, I would probably say that 6-month intern at Citi could aspire for any job in the Polish banking industry and claim he knows how the Western, or he or she, how the Western banking operates. Today, we feed the global network with the people at the highest level in the company. And my second point would be that over time, and we hope that financial market will mature, so the banks will not be the primary or the only institutions providing the capital to the system. And we were hoping that the stock exchange will take its momentum and grow. And 30 years later, or almost 30 years later, I still see the banks as major providers of working capital to the economy, and the economy is still banco-centric. And it's also a credit to the progress the banks have made in Poland.
Okay, thank you very much, because I share all the opinion of Sławek, and I would like to emphasize it is incomparable what we have today and we had 25 years ago. But we were in the banking sector long enough to see that there were and are two different periods of the development. If you take into consideration late 90s and beginning of 2000, what was the feature? This was globalization, deregulation, internationalization of the banking business. Since the crisis in 2009, but a lot of these processes happened since 2010, banking sector is undergoing a huge change. First, many countries have been trying to withdraw from this globalization. If you see what is going in US, what is going in Europe, what is going in many countries, these countries started to oppose in some way globalization and have been trying to be more domestically focused. I believe we also see that Poland has been trying, or already did, has repurchased some banks or merged the big Polish banks, merged, and some other foreign banks. Second, after 2010, we are flooded with the regulations that you cannot even imagine. In my bank, I have perhaps 15,000 different regulations. If you multiply this in average 30 pages, you have hundreds of thousands of regulations in the bank. No one can really know and understand everything that is going in such a situation, but it is a feature of banks. As I started, 2/3 of the people were on the safe side in the bank. Today, 2/3 people are in the back offices trying to follow compliance, audits, first level control, second level control, third level control. This is also our life, despite of what clients get. But clients usually don't see how big costs and changes have been happened already in the banking sector. Later, to stand all of this, you need to invest a lot of IT, because of course, in our mobiles we have banks, but without IT, we couldn't process all this regulatory issue to supply millions of data to different regulators to comply with the requirements. And this is a challenge, because banking sector started to behave sometimes like utility, not necessarily fully fledged independent business. The third issue what we face, and I am really set on this, there is a general opinion, like I believe the American gangster said, why you withdraw money from the bank? Because there is a money. And some politicians behave the same way because they charge the banks, as you have heard, banking tax, bank guarantee fund. All these charges are considered from the tax point of view as a profit. And it is charged again with the 19% of corporate income tax. As on the 1st of July, there will be implemented split payment for VAT, you would wonder, the regulator, so the state, said that the accounts should be for free. Although we pay for IT, for people, for space, for running this business. Why it is so? Because in very populistic, I believe, among populistic politicians and also society, the opinion is following. Banks have money, they are capable to pay. But what is the final implication? The implication is following. Banks are, how to say, deprived of the equity that is necessary to run the business. The liquidity and the, perhaps now they are very safe at least, but I believe that could be a barrier for further development and financing country because it is direct and mathematical relations between equity and your capability to extend credit. If you have no equity, you cannot extend credit. So I see kind of danger. So I have a feeling that we are in very different situation that the banking sector was 10, 15 years ago, that the time for the banking sector is not very, let's say, buoyant, optimistic, that we face challenges. I don't want to say that we have problems with the solvency and liquidity, but I believe that if banks will be restricted and deprived of money, we will have problems with financing in the future. As you may see, the regulations, some regulations in Poland cause that some banks have left Poland or are leaving Poland. Don't wonder, because return on equity in banking sector is lower than in gastronomy or hotels or anywhere. This is the result of the charges. Effective tax rate in some banks exceeds 40%. This is not 19% that you have in the law. This is effectively it is 40%. So I saw the shadow.
Yeah, I think that you always have a glass half full or half empty. The two things which I would like to say, because so many people, young people in the room, I can tell you, if you look at the Polish labor market, banks are still a good place to work for, right? So if you consider where to work and you consider the traditional industries, banks are a good place to work there. And second, and there is a piece which I slightly disagree with Krzysztof, i.e. I think that the regulations are easier to handle than the competition from the non-bank players, and especially Europe will introduce as a first the so-called open banking concept. You might have heard about it. Starting September next year, PSD2 will be fully in place, and you will see non-banks competing in various services segments with the traditional banks. That's a much bigger challenge than the regulation. That's my view. So.
Sorry, I would like only to apologize because I have another meeting in 10 minutes. I will be later. Sorry. Thank you very much that I have this opportunity.
Thank you very much, Dr. Kalicki. Thank you. And Dr. again. Dr. JANISZEWSKI, do you care to?
Well, I will be very brief. Namely, I will tell you, in '92, just to illustrate the progress of Polish banking, in '92, when I joined the HSBC, I was probably one of very few Poles in the city of London. Today, there are a couple of thousand. And one other information for you, Poland won 1-0 with Japan.
Stefan, do you care to comment?
Okay, I think that today Poland has many problems, but among these problems there is no problems of banking sector. That's all.
With that, I think we've run out of time. Is that right, John? Yes. So I think some of our guests will still be here for a few minutes, and you'll be welcome to ask questions. But thank you very much. Let's give them all a round of applause.
I think Mr. KAWALEC